What effect is the Russian-Ukraine war going to have on investment portfolios? And should you be doing anything in response? Join us today as we unpack the history of the situation we see unraveling on our TV screens and begin to appreciate what, if any, effect this will have on our investments. I am Jill Larkan, Media Liaison at GTC, and I will take you through a question and answer session with Mr. Clive Eggers. Mr. Clive Eggers heads the multi-management team at GTC, and he will take us through the developments unfolding and the likely anticipated effects that these will have on portfolios. Welcome, Clive. So can we start off just by discussing a bit of the history then between the Russian and Ukraine war that we've experiencing recently?
I think the key takeaway points is there's a huge crossover in terms of cultural traditions, family, language between significant portions of Ukraine and Russia. So in my understanding, it's the Slavic people, and they even use the same language, they use the same alphabet, etc. So there's huge ties. So in a way, this war is it's not quite a civil war, but there is a lot of family relationships that go across the border. Ukraine was, for many years, a key part of the Soviet Union, particularly from a military point of view. Kiev, in particular, was a strategic military base for the Russian Soviet Union armies, and it contained a lot of nuclear weapons, etc., etc. At the time of the collapse of the Soviet Union, in our understanding, it collapsed because of the failed implementation of communism over a number of decades, and their inability to provide a sustainable economy and well-being to its citizens ultimately led to its collapse. And at the time, this was in the late 80s, early 90s, a lot of us remember the scenes, the fall of the Berlin Wall, etc., etc. At that time, there were a number of nations that separated from Russia and from the Soviet Union, and Ukraine was one of them. Russia then adopted democracy, as did Ukraine. Those democratic institutions had varying degrees of success. Unfortunately, in the case of Russia, democratic principles and policies that were put in place were not sufficient to take hold on a sustainable basis. It's not unusual. I think whenever you get a regime change, what tends to happen in regime change is people tend to forget how bad things were in a previous regime, and they also confuse the attribution of what's happening in their lives. So in other words, if they're experiencing bad things, at first when you move from a failed regime to a new government or state, you understand clearly that a lot of the bad things are about what happened previously. But after 1, 5, 10 years, if things still haven't improved, eventually you just take that poor experience and you start to paste it onto your new experience. And so democracy was seen as not the right way to go by a large portion of Russians. Effectively, in came Vladimir Putin with a very strong and clear vision for a strong Russia. And that's something that resonated with large portions of the Russian population, particularly because they were historically such a strong role player in the global environment. And so here was this promise to return to strength that saw Vladimir come into power, at first democratically elected, in my understanding, but within a very short space of time, he systematically went about defeating the institutions that ensured that democracy would prevail in Russia. And so he's effectively set himself up as president for life, and continued with that mandate of saying we are going to make a very strong Russia. Now, part of that is flexing his muscles, making sure that they are taken seriously in the globe, and part of that, I guess, because of what he is steeped in as a former KGB agent, as somebody who was an integral role player in the Cold War with America and NATO, which is effectively a group of countries spearheaded by America, made up by other Western European nations that all have agreed to ally themselves against whatever opposition they might find. Historically, obviously, that was the Soviet Union, and now, once again, it is Russia that they're coming up to loggerheads with. And effectively, at the time that the Russian Federation collapsed and that these nations came into their own, there was effectively an understanding that they were going to promote democracy, and there was this huge denuclearization effort. And in fact, Ukraine actually had one of the highest concentrations of nuclear weapons of any country across the globe, and they undertook to actually get rid of all of those weapons on the understanding that in future they could count on the aid of America and NATO if they ever ran into trouble, because they were effectively giving up their insurance policy, if you like, of not being pushed around. And so it's quite tragic to see the consequences of what's now happening, because of course they are getting aid, but not nearly to the extent that they were at the time, certainly in my understanding, expecting. In any event, why is Russia even caring about this? Well, this goes back to even 2014. So it's actually got a lot to do with the history of Russia, even before Russia was Russia. In other words, going back to the previous political states that were resident in that geography. It's got to do with the fact that on the western border of Russia, they don't have geographic features that make for a natural defense against any invading army. They have preferred to have large portions of territory that act as a buffer against any invading army. So Putin very much, and the Soviet Union very much, saw those western states, Poland, Ukraine, as a buffer to protect them against invasions against Russia. And ultimately, because of the close ties with them from a cultural and a language point of view, a genetic point of view, they saw portions of Ukraine very much as part of Russia. In the case of Crimea, from Putin and other people in Russia's viewpoint, they were simply taking back territory that was rightfully theirs, that they lost at the time of the collapse of the Soviet Union. The region has been quite unstable since 2014. Purportedly, from Putin's point of view, the reason he's doing this is because this is naturally a part of Russia, and it is part of their strategic defense of Russia. It's part of a stronger Russia, a Russia that needs to be taken seriously and standing toe-to-toe with the likes of America and other superpowers in the world. And also, to a degree, it's in response to what he terms NATO aggression. In other words, those countries that were formerly part of the Soviet Union have gradually become a part of the NATO organization, and as part of the NATO organization, they're automatically entitled to defense in the case of conflict with Russia, and then America and those NATO powers install military installations. The bottom line is those nations were very concerned about Russia and Putin. Poland has been saying for years they are very concerned about Russia. They've been talking to Germany about Russia and saying, look, the fact that you guys use so much Russian gas and are so dependent on them for your energy needs is not a good thing. Russia cannot be trusted, and they have intentions that could come to bear. There's all kinds of debate going on, and it's unfortunately both interesting and a little bit tragic in my perspective, certainly to see the South African government's response in this space as well, because I think regardless of your political motivation or intention, most people should be able to agree that an invasion that leads to the death of civilians and the destruction of people's lives and property is not a good thing and should stop. So I don't personally know how people can say they stand in support of Russia. Even Russians themselves don't seem to be that convinced of the right to invade Ukraine. We've seen protests against the Russian government in terms of people saying they don't want this war to happen. Been a very interesting set of developments by virtue of the fact that we now live in such an interconnected world with social media and internet running sort of 24/7. Never before have we had a war on this scale where there's so much pressure to be politically correct, if you like. People are worried about calling people the wrong names, and here you've got a country actually invading another country and killing people. So it's a very bizarre set of events. There's been all kinds of interesting features to this invasion that's different to normal. And of course, why are we talking about it today? Why is it even relevant? Is because as a custodian of our clients' investments, these developments do have an impact on investment markets. And so that's why we've been paying close attention to developments there.
What sort of impact do you think it might have on our markets? What do we expect to see happening?
So we've already seen some significant impacts on our markets, I think, for two reasons. One, because of the strategic significance of both Russia and Ukraine in certain commodities, oil in particular. Russia is one of the largest oil producers. We are already in an environment where supply chains are strained in the wake of a growing economy post the COVID lockdown two years ago. That's led to all kinds of supply shortages and inflationary pressures. And so this war was unwelcome from its timing perspective, clearly because of the fact that it's further impacting the view on how much oil will be available. That pushes up the price of oil. It's currently above $100 a barrel. That pushes up the price of petrol. Our own petrol price has just gone up again. And so that leads to further inflation across the globe. So even if nothing else happened, this would have had an impact from an inflationary perspective. The response from NATO and the world. So NATO has been very clear that they're not going to attack Russia because Ukraine haven't joined NATO as yet. There was talk about them joining, and in fact, from Putin's perspective, that's why he's doing this, because in 2008, Ukraine said there was an intention to join NATO, and Putin was very clear that he saw that as a threat to Russia's sovereignty. The rest of the world is doing what they can to supply Ukraine with aid without actually sending troops, so they're sending military equipment, etc. In response, Putin and his advisors have made veiled and not so veiled threats that nuclear warfare is not something that they would rule out in the event that these other nations came to Ukraine's aid. And then over and above that, particularly more relevant to the investment environment, is that sanctions have been put in place, and those sanctions further constrain energy supply. They further add to inflationary pressures. They make it difficult for money to move around, and those kind of jitters also lead to what's called a risk-off environment, where investors say, well, we're a little bit concerned about the market impact of this, and so we're going to reduce our risk. And so generally speaking, safe haven assets do better in this environment. Things like the dollar would strengthen, gold traditionally, and higher risk assets are generally sold out of. What's interesting is this time around, cryptocurrencies, particularly Bitcoin, seem to be better than gold. And there's some debate about what's causing that. Clearly, those are very volatile asset classes.
Based on previous experience of this kind of localized invasion, if I can use that term, based on the previous experience of history in the markets, what sort of effect are we expecting? Is it a long-term effect, a short-term effect? Do you think it'll be over quickly as far as our markets are concerned? And what kind of preparations are we making for our clients and our portfolios?
Unfortunately, the answer in terms of whether this is a short or a long-term event, and also the reach of its impact, is still unknown at this stage. So ordinarily, and it's interesting the way you phrase that question, in the past, how these events played out, because I think initially the feeling was very much that this is a fairly localized event, and that history shows that markets aren't really impacted in the longer term by these shorter term localized events. I think that's still largely the base case. However, there are probabilities that this could extend longer than people anticipate, and that it could escalate to further involvement from other regions in the globe. And so this is a potentially very high risk situation. It has escalated. I think we are dealing with an individual in Putin who is becoming increasingly isolated. Whether that is or isn't the case at home, it's certainly the case globally. But he seems to have miscalculated on some level. And certainly we are still, I think, on what's this? I think today is day 6 of the war. And the key cities in Ukraine still remain in Ukrainian hands. And that, I don't think, was the original plan. So the good news is that some kind of ceasefire talks have started, but it's hard to see how those progress. Unfortunately, some of the longer term impacts might be exclusion of Russia from the global economic environment. So almost a return to Cold War. We sincerely hope not, but it's a distinct possibility if Vladimir Putin remains in power, if his purported ambitions to reinstate the Soviet Union, which he made in a rambling speech just before the start of the war, he stated that the Soviet Union should never have collapsed. And quite frankly, if that's the case, then Russia potentially gets excluded on a permanent basis. We've already seen large institutional companies selling out of their Russian exposure and talking about wanting to divest. Now, the reality is nobody's buying assets, right? So you can't actually sell Russian assets at the moment. You can say you want to get rid of them, but there's nobody on the buying side. So I think what this does do in the short term is it does exacerbate the inflationary pressures. We know we've moved away from the statement that inflation is transitory and it's here for the medium term. But most pundits expected inflation to settle to about 3% towards the end of this year in the United States, which is at an elevated level, but it's not at a hyperinflationary level. We think that this event could push that out. The longer term impacts, as I say, are dependent on the ability for Russia and the world to get past this, to reintegrate once this situation has calmed down. Like with any disconnect in a relationship, when you're at a breaking point, it's difficult to see a future together. It's the same for the globe and Russia. They're at a clear breaking point. Russia has stated they want to return. Well, Putin has stated they want to return to the Soviet Union. What's fascinating to see is that the individual citizens seem to be revolting against that, and even some of these oligarchs who are purportedly his close allies and have a lot to lose are coming out and saying we'd rather things return to peaceful situations. So in an environment where Putin gets his way and where he doesn't back down, and where there's some long protracted war in Ukraine, where he, let's say, settles on. The interesting thing about Ukraine is it's kind of almost divided in half, kind of the southeast corner versus the northwest corner. The southeast corner is very much Russian-centric, and that's where a lot of the ethnic similarities are. The northwest corner is the one that's closer to Europe and wants to be part of NATO and wants to be part of the EU. They've in fact asked to be made part of the EU overnight because of the protection that would bring them. So, in an event that Vladimir says, okay, we've captured all we want to capture, even then, if the new boundaries are drawn, how does the world go back to saying it's okay, we want to start trading with Russia again? They've clearly damaged relationships, and in that environment, that means that some of the supply chains that have been set up, including Russia, now have to be rebuilt and exclude Russia. So we think that unfortunately it is a medium-term impact on the economy. It's interesting to see that markets they haven't shrugged it off, but they're still quite strong. And so what that is telling us is that short of an all-out war and the specific counters that have direct exposure to Ukraine or Russia, the rest of the economy should do okay. So in other words, they're still expecting the Federal Reserve to raise interest rates to stave off inflation in America. So they're still expecting the US economy to grow and the global economy to grow. It's just that this will be a headwind. So things will be slightly more difficult than they were. What it does mean, though, for those counters, so for example, within our own funds and with most South African retirement funds, have investments in emerging markets. We ourselves are an emerging market and we invest in other emerging markets. Russia is an emerging market. So we have exposure currently through two mandates, an active mandate through Coronation, which is their global emerging market fund, one of the top rated emerging market managers in the world. And then we have a passive allocation built with our internal capability through WWC. And there we have the exposure to emerging markets on a sustainable ESG focused basis. Now, Russia actually represents a very small percentage of the emerging market universe on an index basis. So our passive allocation only has about 4% exposure to Russia. But Coronation builds portfolios from a bottom-up perspective. They don't focus on country allocations, and so they had a much larger allocation. They had about 11% of their portfolio exposed. When we do it on a look-through principle, so let's say we take one of our default portfolios, the GDC5 fund, which is a mainstay within our stable and is a default option on most of our retirement funds. When we do it on a look-through basis, we have about 0.3 to 0.35% exposure to the area. So it's a very small allocation to Russia. The reality is those shares have largely sold down 80-90% of their value already. So those have pretty much been written off. Years from now, you're not going to be able to look at your retirement fund statement if it was plotted on a graph and say, there was the Russian-Ukrainian war. We've built our portfolios in conjunction with our clients and our client interface team to give them the highest probability of reaching their investment objectives over the right time horizon. This event doesn't change any of that. It really doesn't. So there's no need for our clients to take any action in regard to their investment portfolios on the back of this Russian invasion of Ukraine. Absolutely not. What we are doing behind the scenes is reevaluating our manager selection, our asset allocations, to see whether there's any action that we need to be taking. Right now, as it stands, there isn't. Our portfolios are well diversified. So remember, although we look at scenarios and how different things might play out, we could never have built our portfolio specifically for a Russian invasion of Ukraine in the year 2022. That's impossible to do. And quite frankly, if anybody claims that, you should run a mile. Certainly from a retirement fund perspective, this is a long-term investment. This is your capital that you're saving up to look after you, once you retire. So why are our portfolios able to handle this condition if we didn't see it coming? The reason they are is because we build our portfolios on an all-weather basis, if you like. So our portfolios are well diversified in terms of asset allocation. So right now you've got a couple of things happening as a result of this. You've got oil going through the roof. Russia is one of the biggest suppliers of platinum and palladium, after South Africa, by the way. And so platinum and palladium prices and commodity prices are going through the roof. That's good for mineral companies based in South Africa. Our portfolios have exposure to South African equity. Our managers have a good exposure to mineral companies. Those are going up. The rand is weakening along with all other currencies because the dollar is strengthening in this environment, because investors run to the dollar when they're fearful. And ironically enough, even when you try to get away from dollars, you temporarily cause a spike in the dollar price. So what does that mean? That means that actually your offshore allocations, which we recently reweighted to the maximum 30%, has actually benefited from that rand weakness. The coronation allocation will suffer, as I mentioned, a drawdown, a loss of in those assets that are specifically exposed to Russia temporarily. We may see a recovery in those prices down the line, depending on what unfolds. But as I say, it's very, very mitigated. Within the more aggressive portfolios, it's only 0.3%. Within the less aggressive portfolios, it's even less than that. So it's a case of hold fire. Don't get too concerned. This is on some level noise from an investment market perspective. It's very scary noise if you pay attention to it, and clearly it has potentially even more significant ramifications as it unfolds. But we continue to monitor the situation. If we feel that additional protective measures are needed, we would look to implement those where it's practically possible to do so. But for now, we're comfortable that the allocations and the portfolios and the managers that we've employed on your behalf are doing what they should be doing, and that the portfolios should weather this storm.
Clive, thank you once again. Really informative. You're a star. Thank you very much, Clive.